Dara, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit, because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. Yes. So at some point we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy, because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues. that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes, because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose, out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent, and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are 3 keys to transport and where the industry is going: autonomous, electric, and shared. And I think all 3 are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
to,
in
mean to a layman like me?
Mean
crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber. There will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
Will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also...
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
Brookline, Boston, WNBP Newburyport, KNEW Oakland, KOSF 103.7 FM HD2 San Francisco, and Sirius XM Satellite Radio Channel 119. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Live from New York and New Jersey, streaming on YouTube. It is Jobs Friday. It's also vacation eve for Jason Kelly. It's also August 7, 2020. And Jason, I know you're getting ready to go on vacation, and it's happening on a day when we had a lot of news, and investors, I feel like they are definitely in a wait-and-see mode.
They definitely are. It felt like, as we were watching the market, almost a Rorschach test when you look at the jobs report, because you sort of see what you want, right? You either see, all right, this recovery is underway, or you see some stalled momentum.
Is it the young woman or the old woman? What do you see?
Exactly. Is it a frog or a Porsche? I don't know.
It's a Porsche.
It's a Porsche.
All right, we got to know our audience. All right, let's get a check on the trading day. Let's kick things off with Charlie Pellet. Hey, Charlie.
Well, hello there, and here's what's going on. What a week. First of all, we've got the Dow, the S&P, NASDAQ, all lower. S&P, by the way, close to session lows right now, virtually bouncing along the bottom. S&P is down 10. I'll give you the numbers first. The story in a moment. Down now by 0.3%. The Dow lower by 54 points right now, down 0.2%. NASDAQ hard hit today. Tech stocks slumping. NASDAQ down 133, a drop there of 1.2%. Technology shares lower as the White House ramps up its confrontation with China. Also, investors are weighing doubts that lawmakers will be able to agree on a new round of economic stimulus. NASDAQ pairing a weekly gain as heavyweights including Apple, Microsoft, and Amazon all move lower. Right now, the S&P, as I mentioned, down 9, down 0.3%. The 10-year down 6/30 seconds with a yield of 0.55%. Gold is down 2% after its spectacular run this week, now at 2,022. West Texas Intermediate crude lower by 1.8%, 41.18 a barrel. Recapping, down Friday, on track for an up week. S&P lower by 9, down 0.3%. I'm Charlie Pellet. That's your Bloomberg Business Flash.
All right, Charlie Pellet will be checking in with you throughout the afternoon. It's down, it's up. Let's make sense of it all by setting the Business Week agenda. Michael McKee with us, international economics and policy correspondent. He's in our Bloomberg Interactive Brokers studio. Dave Wilson, he joins us from New Jersey, stocks editor, author of the Chart and Stock of the Day. Mike, I want to start with you because we saw the headlines, we saw the market reaction, we saw and heard Larry Kudlow. What's your takeaway as you've and the team have been able to digest this jobs report specifically and what it tells us about the economy?
Yeah, I think people this morning were sort of thinking, well, this is a pretty good report, but I maybe that the adjective now is not pretty good, but it's not bad, put it that way, because we got 1.7 million jobs created, and that's less than half of what was created in June. Not created, restored, put it that way. These are not new jobs. But we have a long way to go. Even in terms of the number of people who the Labor Department counts as unemployed because they're in the labor force, they say they want a job, that's still 16 million, more than 16 million people. So there's a long way to go. It's some progress, but it also is for the first half of July, and anecdotal reports are things have gotten worse. So I wouldn't make too much of it at this point, which is why I think the people on Wall Street are not making too much of it. It was close enough to estimates, and it doesn't tell you one way or another that things are going to get remarkably better or remarkably worse.
Yeah, it's like, okay, all right, fine, next. Let's see what's going on. Hey, let's bring in someone who watches Wall Street. Dave Wilson, talk to us a little bit about the trade. And I just want to mention a headline crossing, California becoming the third U.S. state to top 10,000 virus deaths. So we, of course, continue to monitor that. And investors, Dave, also continue taking those headlines.
Oh, absolutely. I mean, there's a focus on, what's happening with the virus, on what's happening with the stimulus plan, or not happening, to be more specific at this point. And then beyond that, I mean, you look at today's trading, tech stocks kind of jump out because of the worst performers on the day among the 11 main industry groups in the S&P 500. So you take a look at Apple, Microsoft, both down about 2%, Amazon off about 2%. So, that's enough given their relatively high weight, you might say, in the S&P 500 to cause some issues for the market. So, you have that going on, but it's not really a broad-based decline at this point. In fact, you have more stocks up in the S&P 500 than down. It just goes to show you how much importance those few companies really at the top of the pyramid when it comes to the S&P 500, how much weight they carry in terms of overall performance from day to day.
It's a movie, Jason Kelly, we have seen before.
We have seen this movie before. Another movie we've seen before, Michael McKee, is Democrats and Republicans not being able to make a deal on Capitol Hill. How much are people watching that and maybe investors waiting to see what happens next? And what's a gut check? What's a reality check from the folks you're talking to as to what some fiscal help looks like here?
It reminds me of sort of Friday the 13th, version 53 or something like that. That's what they always do.
Yeah.
Now, the problem is that we're running out of time here. And people are already off the benefit rolls. So the old, we're enthusiastic, no, we don't like each other, no, the other side lies down with cats and dogs, and then all of a sudden we have a deal. Format may not apply, and from what I understand, they are still significantly far apart, particularly on aid to states and cities. The Republicans have made sort of a campaign issue of the idea that it's not the virus, it's their bad management. At least that's what the president's been saying, and the Democrats say no, they have serious holes in their budgets. So it's hard to say at this point whether they will actually reach a deal. It was good news that they did schedule another negotiating session. They're meeting now because as of last night they didn't have one.
Right.
And they have sent people home, but they can call them back if they get a deal.
Well, all I'm going to say is Danny Blanchflower earlier on Surveillance, this whole idea of walk-around economics, that if you walk around, and it's hard to do in a social distancing world, you really get a good feel of how tough the economy, how tough a place it's in right now, and gives you a very realistic picture. Michael McKee, you're the best. Mike McKee, International Economics and Policy Correspondent at Bloomberg News, and so too is Dave Wilson, who will be back a little bit later on with his chart and stock of the day. Jason, we've got a pretty killer show coming up.
We do. Walk around, just wear a mask. That's all we ask. We do have a really great show coming up. It's kind of a go-to Friday. I was joking about it. Friends of the
Show Friday.
Stopping by. I love it. On the labor market, Chris Liu, we talk to him every month like clockwork, always has such great insights, in part because he has worked across the government. So these questions that we were just putting to Michael McKee about Congress, its role, also, we got to ask him about TikTok, Tencent, everything going on with China.
He understands, right? He's been on the front line from Congress, from the White House, so he understands how it works. So I'm looking forward to that. On the virus, speaking of a friend of the show, Dr. Ian Lospader, we get our weekly check, as we do on Fridays with him. He's over at NYU Langone Medical Center. He's been on the front line. And then on sports, we both love
sports,
Paul
I was
Rabel.
so excited. I texted him yesterday to see if he was game, and he was, and he is. He's going to join us later. Paul Rabel, arguably the greatest lax player of all time, the GOAT. Unfortunately, his team's out of the tournament, but here's the thing. He's in charge of the tournament. He's in charge of the whole league. He created it with his brother, so he's going to give us a preview of Sunday's championship game.
And I feel like he created the first really successful sports bubble.
He
like
did,
totally,
he did.
and way ahead of the pack. So looking forward to checking with him. And then you've got another friend that you're going to bring to us.
Absolutely. KKR co-chairman, co-CEO, and co-founder, Henry Kravis.
We're behind. Wall Street's behind. The C-suite is behind. We've all been slow in recognizing the problem and doing something about it.
And that's Henry Kravis. We're going to hear more from him later about how Wall Street is dealing with diversity. A very, dare I say, candid conversation with Henry.
And we've got the $1,000 bicycle bailout. And we're going to wrap up the day with the founders of this really cool online fitness program. They've got some really well-known investors. But right now, quick check on the bite of the day.
Let's do it. Today's number, $860 million. Speaking of KKR, it is betting on Brooklyn apartments as the pandemic rattles the housing market in New York City. We're going to be talking a lot about New York City today. The New York-based alternative asset manager, started by none other than Henry Kravis, his cousin George Roberts, and Jerome Kohlberg. They are going to buy a portfolio of newly developed rental buildings in Brooklyn from Brooman Realty in a deal worth about $860 million, one of the biggest commercial real estate acquisitions in New York this year.
Private equity loved real estate after the financial crisis. It's interesting to see this purchase. All right, lots to come over the next 4 hours. Let's get you going, though, on world and national news headlines with a check-in with Nancy Lyons. Hey, Nance.
Hey, Carol. The U.S. economy added 1.75 million workers to payrolls, and unemployment fell to 10.2%. It's progress that's welcomed at the White House. We hear more from Bloomberg's Irv Chapman.
The recovery is self-sustaining and will continue, White House economic advisor Larry Kudlow said in a Bloomberg interview.
The unemployment unemployment rate will move to single digits easily in the summer and fall. Inventories are falling, car sales are surging. That tells you this is a self-sustaining recovery. We want to keep it that way.
Kudlow said the White House is drafting executive orders to carry out the president's offers for limited spending to boost the economy further. In Washington, Irv Chapman, Bloomberg Radio.
More on those negotiations that are continuing today on a new coronavirus relief bill. It's unclear if they'll reach a deal by the end of the day, which is the deadline the White House had set. Bloomberg's chief Washington correspondent Kevin Cirilli says the administration is ready to act.
I spoke with at least one administration official who told me essentially that they are fully prepared to utilize executive orders as it relates to evictions, as it relates to financial unemployment benefits, and on student loans.
The two sides are said to be far apart. Former National Security Advisor Brent Scowcroft has died at the age of 95. He served 2 presidents in that job and played a central role in the first U.S. war in Iraq, the 1990s. Round 2 of the PGA Championship in San Francisco is underway. The leader right now is Lee Hao Tong at 5 under. Tiger Woods is not teed off yet. Our coverage begins at 4:15 Wall Street time right here on Bloomberg Radio. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nancy, thank you so much. Well, the big news in New York City and New York State, here in the burbs as well. School's going to be back. We don't know exactly what it's going to look like, but Governor Andrew Cuomo giving the go-ahead. This was probably the most awaited decision of the week. Forget Jobs Day.
Right. Yeah, I have to say when it crossed, I kind of yelled out to my household, although we've been getting a lot from my daughter's school for the last couple of weeks easily, about what they were thinking, how they were planning. So we kind of knew a lot, and I think they were just waiting for Cuomo to kind of say, okay, we're in. Governor Cuomo saying today on a conference call with reporters, by our infection rates, all school districts can open with tight precautions. But even though he said all districts across the state have permission to resume in-person classes, that doesn't mean they will.
Right. That's the key point. I mean, what people were waiting for was basically the can we? You know, we've all got these plans, these school districts, but can we actually do it? Because Cuomo, the governor, is in a position to basically say, you can't open. Now he's essentially saying you can. How you do it is ultimately up to you. Yeah. And now the ball, from a New York City perspective, is really in Mayor Bill de Blasio's court. And let's keep in mind, it's the largest school district in the country. It is the only one of the big ones at this point that has said in-person classes are a possibility.
Right. Largest U.S. system, 1.1 million students, and they really are kind of defying that national rush to online education, which we saw in Chicago this week and certainly other areas. But it is going to be up to, I think, school-by-school basis, Jason, and region by region, or school district, I should say.
District by district, I think, is how it's going to play out, and certainly that's the word we're getting. Now, individual schools may ultimately make decisions about having to close down, but it will be made, as you say, region by region and district by district. So,
and safe to say, everybody's going to be watching the numbers, because if there's any kind of uptick or any problems, you know, all of this can change very, very quickly, right?
It absolutely can. And, you know, watching the numbers and watching, you know, maybe some of these little micro breakouts. This is Bloomberg.
This was a hot spot.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks at the lows of the day or close to it. The Dow, the S&P, NASDAQ 100 index all slumping as the White House ramps up its confrontation with China, and investors are weighing doubts that lawmakers will be able to agree on a new round of economic stimulus. Right now, the S&P is down 14. That is a drop of 0.4%. The Dow Jones Industrial Average moving lower now by 97 points. That's a drop of about 0.4%. NASDAQ is down 153 points. NASDAQ lower now by just about 1.4%. So the Dow, the S&P, NASDAQ all declining. NASDAQ is at the low of the day. 10-year yield 0.55% down 7/30 seconds. Gold now lower by 1.8% at $2,025 the ounce. And West Texas Intermediate crude down 1.2%, 41.43 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you so much for that update. Well, the U.S. labor market, as you've been hearing from Charlie and others right here at Bloomberg, continuing to regain some ground in July. It was at a slower pace, indicating the economic rebound still making headway despite a surge in coronavirus infections. Larry Kudlow, the president's chief economic advisor, head of the National Economic Council, weighed in about the report earlier on Bloomberg Radio and Bloomberg TV.
This was a hot spot payroll report. This was July 20th to 18. And the surging hotspots in the South and West and some other places began in the back end of June and lasted through July. You know, there was some pullback of reopenings and so forth. And yet, we still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
It seems like just about anybody looking at this had the "and yet," regardless of what you made of it. Let's put it to Chris Liu, senior fellow at University of Virginia's Miller Center. He, of course, is former Deputy Secretary of Labor under President Obama. He joins us on the phone from in and around the nation's capital. So, Chris, as you've had a little bit of time, few hours to digest this, and you know the mechanics of this better than anyone, what should we take away from this specific jobs report?
Well, look, I think the top-line number, 1.8 million, as well as the drop in unemployment, were both positive signs. But I think when you look beneath this, you know, you also have to consider the context that we lost about 22 million jobs in the spring. We are still down about 13 million jobs. And it's pretty obvious that the economy or the economic recovery is slowing pretty dramatically from what we saw 2-3 months ago. So there are a couple things that I look at. I look at, you know, the 5 million people that have left the workforce. Obviously, we saw yesterday that about 31 million people are on unemployment. So we're still in a pretty big hole. And, you know, again, I mean, this sort of confirms what we've always known, which is we're never going to have a sustained recovery until we get our arms around this virus. And, you know, every time this kind of breaks out in a different part of the country, we have these reopenings being paused or rolled back again. And that's just a really tough environment for this economy to get any legs in.
So then what kind of visibility would you think you might be able to feel comfortable talking about, Chris, in terms of the types of labor reports that maybe we should all get ready for over the next few months as a society? Because we know the vaccine's coming, but the dates are maybe the end of the year, maybe early next year.
Well, look, I think we're going to continue to kind of climb out of this hole, but I would take issue with where Larry Kudlow is as to whether, you know, this is really kind of a hot spot or a V-shaped recovery. I think it's kind of crawling out of this, and I think what we see and among the different data that we've seen over the last couple of weeks, you know, some concerns whether temporary layoffs or what we thought were temporary are now going to become permanent. We continue to have this issue about state and local government employees and whether they're going to face layoffs if there's no relief from Washington as well. And the other thing, I just sort of look in this number, I mean, 2/3 of the gains in these report were from basically leisure, hospitality, restaurants, and retail. And we know that those are kind of the industries where it really, there's a lot of face-to-face interaction with people. And you do wonder if we can't get our arms around this pandemic, whether the gains just sort of stop at that point and whether people are just going to permanently change their spending habits. It's hard to imagine kind of the travel and tourism industry going back to normal anytime soon.
All right, so Chris, you mentioned help coming from Washington, and that's where I want to go next, because I feel like everyday folks, and I would put myself in that category, even knowing enough to be dangerous, looking at Washington think, hold on a second, like there's a clear need here. Why can't these guys get together and agree on something? What's going on here? I mean, help us understand what the stalemate is and what you think may happen, given that you know how Congress works. You've worked there.
Yeah, I mean, look, the lesson we learned from the Great Recession is that if you come to the table with too little stimulus or you end it too quickly, it means the downturn goes on longer. In 2009, the Obama administration got an $800 billion stimulus package passed, and that was it. And, we're now talking trillions of dollars that have already spent. We're talking about, a House Democratic proposal of about $3 trillion, and then the White House coming in at about $1 trillion right now. And so I applaud them for saying more money needs to go in. But it's very clear when you look at things like enhanced unemployment benefits, whether you look at kind of assistance to state and local governments, particularly assistance to schools that are trying to reopen, there is a real financial need around the country right now. And I guess the only question is can they compromise in the middle? I think that they probably will. But I do wonder about, all of those people trying to figure out, hey, how do I make my rent payment? How do I buy groceries? While Congress is kind of dithering over all of this.
Well, and we're going to continue this conversation because, Chris, I want to ask you about a tweet that the president put out yesterday about working on executive orders when it comes to payroll tax cuts, eviction protections, unemployment extensions, and student loan repayment options, because we all are trying to understand exactly what authority the president has to do with this. So hang on a second. We're going to do a little bit of news. I'll give you some time to think about it, and then we're going to come back and continue that conversation. We will continue with Chris Liu, one of our go-to voices when it comes, really our go-to voice when it comes to the labor report, former Deputy Secretary of Labor under the Obama administration, and he's the senior fellow at the University of Virginia Miller Center. But, Jason, anytime we're going to talk with him, we love it because he understands Congress, he's worked there, he understands that part, he understands the White House. He really sees Washington and how you get things done from many, many different perspectives. You are listening to Bloomberg Business Week. Carol Massar, Jason Kelly, and this is Bloomberg Radio.
Okay, ladies and gentlemen, I am placing a new order for Japanese yen. I want to sell short and I want to open position at 105,917. 105,917. Okay, order placed to sell short Japanese yen at 105,917.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we're going to continue our conversation with Chris Liu at UVA, also a former official in the Obama administration. We're going to talk a little bit about executive orders, what's possible. Also got to ask him a little bit about China if we can.
Totally. We've got lots to cover. First up, though, also covering a lot on this Friday is Charlie Pellet.
And I thank you very much, Carol Master. Thank you, Jason. Happy Friday to you both. By the way, looking at a down day on Wall Street now with the Dow, the S&P, NASDAQ appearing on track to end a winning week with a losing session. Tech stocks are slumping as the White House ramps up its confrontation with China and investors weigh doubts that lawmakers will be able to agree on a new round of economic stimulus. Stay with Bloomberg Radio for the very latest on any developments this Friday out of Washington. Right now, the S&P down 17, a drop there of 0.5%. Dow Industrials down 114. That is a drop of 0.4%. NASDAQ down 180, a drop of 1.6%. 10-year down 630 seconds. The yield now 0.55%. We've got gold down 1.5%, 2,031 right now for an ounce of the precious metal. And West Texas Intermediate crude down 1.7%, 41.25 for a barrel of WTI. Big news in New York. New York Governor Cuomo says New York City's public schools can hold in-person classes this fall, paving the way for the district to become the only major American system to open its doors despite growing unease among teachers, administrators, and parents. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. And ahead of the announcement today, he spoke with Bloomberg Television about the challenges and risks of getting school kids back in classrooms.
The true risk of going back to schools for kids is still a little bit unclear. One thing that's certain, though, is that it's very difficult to send kids back to school if you've got a high level of transmission of the virus in the community, because essentially a school is exactly the type of environment you want to avoid if there's large amounts of transmission in the community.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. UPS will apply hefty surcharges on its biggest customers during the holiday peak season to help manage an avalanche of residential deliveries spurred by the coronavirus pandemic. UPS shares, they are surging today by 6.9%. Rival FedEx also jumping by 5.6%. Recapping, equities lower, S&P down 15, down 0.5. Gold gold down 1.5%, $2,032 the ounce. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to Chris Liu, former Deputy Secretary of Labor under the Obama administration, Senior Fellow at the University of Virginia Miller Center. He's on the phone from Virginia. So, Chris, we talked about President Trump, his tweet yesterday, how he talked about working on these executive order when it comes to a payroll tax cut, eviction protections, unemployment extensions, and student loan repayment options. Executive orders, my understanding is some things he might be able to do, some things are dicier.
I think that's exactly right. I think when you talk about mortgage or rent relief, to the extent that the mortgages are backed by the federal government, or it's someone who's in federal public housing, I think that's certainly possible. I think obviously student loans, since a lot of them are backed by the federal government, some kind of extension of the moratorium is possible. The wholesale shifting of money to provide enhanced unemployment, I'm pretty dubious that you can do this. It's a cardinal rule of appropriations law that appropriated funds can only be used for appropriated purposes. So you can't just kind of move pots of money around. And what it appears that he's doing is that there's money that was in the CARES Act that they think has not been spent, that they want to shuffle around. And the truth of it is that while it's not been spent, it's already been allocated. And a lot of that has already been allocated to state and local governments. So all you're doing is basically robbing one pot for another pot, even if you could do it. So he might be able to do some things, but he can't do everything that is being discussed right now in Congress.
So, speaking of some of the president's actions, Chris, I got to ask you about what's been going on with the president and China and TikTok and ByteDance and Tencent. What do you make of that from the perspective of someone who understands global trade, policy, and U.S.-China relationships? Like, what are we to make of this, and what's most likely to happen next in your estimation?
Yeah, so there is a legitimate issue when we're talking about TikTok and WeChat in terms of data being shared with the Chinese government, data about U.S. users, or the censorship that's on the WeChat platform, which we don't talk about enough, but is a pretty big platform here in the United States among Chinese Americans. So there is a legitimate issue, and there's a bipartisan concern about it. It's the reason why, if you're a Department of Defense official, you're instructed not to have TikTok on your phone. But how you're going about this is odd, and I think unconventional. To use an executive order under the guise of national security probably stretches the bounds of what I consider appropriate. And I think what the president is doing with respect to TikTok in trying to force a transaction, and then, this thing he threw out the other day saying, hey, and the federal government should take a cut of that, I think, again, stretches, I think, what Democrats or Republicans would say is acceptable behavior of the federal government towards the business. And so, look, I think the aim is probably right in trying to rein them in, but I have some serious questions about how he's going about doing this.
In terms of the U.S.-China relationship, Chris, I'm curious about some of the conversations you guys had in the Obama White House. I mean, are you surprised at how contentious it has become and kind of how this tech war between the two nations has progressed? Do you think we would have gotten there ultimately, maybe in a different way? But, China is a much more developed nation. It's much more important to the global economy. It's not like it was 10 years ago.
Right, and I would argue that if you wanted to counter China, the one thing we should have done was to be part of the Trans-Pacific Partnership, which I would have put the U.S. In a trading relationship with a lot of the other countries in Asia. So I think that was a huge missed opportunity by this administration. And then obviously we've had, a trade war for the better part of the Trump administration, which is now morphed into kind of a war over the, cause of coronavirus and how forthcoming they've been, which is now morphed into kind of a tech trade war as well. I don't think this is good, but I think we need to recognize, the U.S.-China relationship is a complicated one. There are certainly areas where we need to find a way to collaborate with them on, something like climate change being the most important one. But there are obviously tensions. I mean, they are a rival economically and increasingly militarily. So I think we need to look at this in a holistic way. And my concern is that too much of these are kind of one-off battles between the U.S. and China without engaging our allies, and I think without having a clear understanding of 2, 3, 4 steps down the road.
Absolutely. All right. Great context as always, timely and insightful. We love catching up with you. Chris Slew, down at University of Virginia's Miller Center, of course, a former member of the Obama administration. Great to get his insights. Check him out later on the pod if you missed any of that convo. Let's get down to Washington as well. Nancy Lyons is there with World National Headlines. Hey, Nancy.
Hey, Jason. Hopes are fading on Capitol Hill for reaching a deal on a coronavirus relief bill by today's self-imposed deadline, although talks have resumed this afternoon. Treasury Secretary Steve Mnuchin, who is negotiating for the administration, remains hopeful.
If the Democrats are willing to compromise and do something, I think we'll get something done. But again, we're not going to do a deal that isn't an attractive deal for the American public.
House Speaker Nancy Pelosi is negotiating for the Democrats.
We have been mightily trying to find common ground with our colleagues. It's hard when your values are so different in terms of bubble up from the working class families instead of trickle down from above.
President Trump has said he'll take executive action if an agreement is not reached. As negotiators work on the next coronavirus relief package, the average American is facing uncertainty. A recent survey by the U.S. Census Bureau estimates 27% of adults in the U.S. missed their rent or mortgage payment for July. And for renters alone who were polled in late July, just over a third said they have little or no confidence they'll make their August payment. An appeals court says the U.S. House can sue to force former White House counsel Don McGahn to testify. The ruling from the U.S. Court of Appeals in Washington rejected the administration's arguments that Congress lacked legal standing to sue. Round 2 of the PGA Championship in San Francisco is underway. Lee Hao Tong is the leader at 5 under par. Our coverage begins at 4:15 Wall Street time right here on Bloomberg Radio. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Nancy, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Masser. I am going to bet, I'd be willing to bet a lot of money you, Carol Masser, have been to Mystic, Connecticut.
I've been to Mystic several times, and I have to say one of our favorite places to sail to on the Sound is actually, we don't stay in Mystic, but right across in Noank, where you can get lobsters in the rough. But it literally is kind of
Lobsters in the rough?
Yeah, well, you're on the water, and there's these great places. They're called Abbott's and Costello's. One place does a lot of fried, but it's so much fun, and it's just all seafood, and you're just out there at picnic tables. But it literally is kind of a stone's throw away from Mystic. But yes,
it's beautiful.
It's
beautiful. Yeah, a
so
friend of ours, actually a
beautiful.
former colleague, who you know, Laura Marcinek. Laura Marcinek Pertel. Now she got married there, right on the water. So beautiful.
I've made candles with my daughter at Mystic.
Yeah. No, it's really great place. The reason we're talking about it is it's gotten super popular, not just to go and make candles or get hitched.
Yeah.
It is a place that people want to live because, again, people are fleeing New York City.
Right. And listen, people are checking out all these hot spots, out in the Hamptons, out in the North Fork of Long Island. But what's interesting is Mystic is not necessarily a place where you see a bunch of bidding wars when it comes to buying a property, but you are right now. Homes in Mystic spent a median of 38 days on the market before finding buyers in June. It's the fastest pace since 2016. Inventory is down 36% from a year ago, and the median sale price jumping almost 8% to $340,000. And of course, everybody's looking for those homes that are right on the Sound. It's right there, or on Mystic River.
Right.
It's all so beautiful.
Yeah, no, it's a gorgeous place, and it's the sort of place that if you think, well, I'm going to go into the city maybe one day a week or maybe every other week, pretty great place to live.
We're thinking about this, right, Jason Kelly?
Everybody's thinking about it. It is what everybody is talking about.
I know. It's why people are thinking more about
I think especially when you live outside the city.
Yeah, and they're thinking that those vacation weekend homes are now becoming more regular homes.
Yeah.
All right, you're listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
On Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, and NASDAQ were all declining. Technology leading the way lower. The White House ramping up its confrontation with China. Investors weighing doubts that lawmakers will be able to agree on a new round of economic stimulus. NASDAQ pairing a weekly gain. The Dow, the S&P, though, also on track for a move higher this week. S&P right now down 12. That is a drop of 0.4%. The Dow Jones Industrial Average down 70, lower by 0.3%. NASDAQ is down 158 points, down 1.4%. 10-year yield 0.55%. Gold is down 1.4%, 2,034 the ounce. And West Texas Intermediate crude dropping now by 1.5%, down 62 cents a barrel, 41.33. Recapping, S&P lower, down 12, down 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Masser. And, as we look to wrap up the first hour of the show, Carol, I think it's worth dwelling a bit, if we can, on our conversation with Chris Liu, only because, you and I were messaging to each other back and forth toward the end of that interview. He's really become a go-to guy for us. And
yes,
I think one of the most important things to remember about him, and he really demonstrated in that conversation, was that he has worked across the various branches of government, because we didn't get to talk about the Supreme Court. He worked in the judiciary system as well, so he knows all the levers, and so his perspective on what the executive branch can and can't do, I think, is critical right now in terms of figuring out what happens next.
Yeah, totally. And that's why I love, talking to him, because he really does understand how government works, as you said, from the three branches of government. I put it out on Twitter. I put the link out for our Apple podcast feed so that folks can, it'll be uploaded a little bit later on, but definitely check it out. It's a great thing for, I was going to say the ride home, but you're home probably already.
Exactly.
So maybe you could have a glass of wine at the end of the day and you want to listen
doing some dishes.
a little bit.
I listen to a lot of podcasts doing dishes. All right. Joel Weber, the editor of Bloomberg Business Week, he is joining us from Massachusetts to talk about a really interesting story. It's about Italy. It's about bicycles, and it really is a window into how we are recovering very unevenly, shall we say, from everything that's going on right now. Joel, tell us about this story by Vernon Silver.
Well, on its face, it sounds like a great program, right? This bicycle bailout that Italy came up with. And that was what really intrigued me about it, because, here's a country known for bicycles and known for cycling, and also goes to say, let's have fewer automobiles on the road, as this program is sort of attempting to do. But at the same time, it risks alienating large portions of the country who can't even afford to buy a bike in the first place, right? So what's ironic about this is that one of the ways that governments are attempting to stimulate the economy is to give consumers a break, but then there's so many people who have fallen on hard times during the pandemic that what's really going to happen here is that we're going to have inequality be exacerbated.
Yeah, I mean, I love this story, and I love what Vernon and the team write. Joel, that they talk about, these trillions of dollars. We were just talking about it with Chris Liu, who was in the Obama administration. Trillions of dollars that are going for everything, and by everything that sometimes means, like a really expensive bicycle. And you're right, it's helping to kind of widen ultimately the income gaps that are already laid bare by the virus. Let's bring Vernon Silver into the conversation as well. He joins us right now, and he is a projects and investigations reporter, and he joins us on the phone, I believe, from Rome. So Vernon, talk to us about this story, because it really is a great read, but it also kind of makes you stop for a moment and realize, the inequalities that are out there.
Yeah, honestly, this thing starts with the moment that Italy comes out of the beginnings of this lockdown. And one of the most noticeable things on the streets were the piles of boxes of bicycles and the crowds of people in front of the bike shop. Because when you are giving people essentially the ability to get a bike of up to a value of $1,000 at 60% off, people are going to grab it. But those people are not, the Deliveroo bicycle guys. It's people like people, that we saw and interviewed, which is, someone who needs a couple.
So, Vernon, how expensive were the bikes that you bought?
Okay, this is, you got me.
Ouch! Ouch! Joe Weber!
We have not discussed this, and I was going to save it for the end, but I had to try, right? I mean, 300. So here's, and this is interesting because this is also about inequality. I sprung for a 300 euro bike. It's a mint green number with a brown seat. It's really nice. But I did not go for the super expensive one because the decree that announced this thing said resident citizens in Italy of cities could get this. And I'm not an Italian citizen. So I had no guarantee that I was going to get the rebate. And like tonight, literally tonight, the government is working on finalizing the wording of who exactly gets it. And I won't know yet if I get it. But if they keep it with just citizens, talk about inequality. Who are the people who are coming to Italy who need to do the jobs that might require a bicycle? Immigrants from Africa, from the Middle East, from Filipino delivery men.
Right.
If you only give it to Italian citizens, you're cutting out like all the people who you can see on a daily basis who need a bicycle. So I might not qualify as somebody who's not an Italian citizen.
For a second there, Vernon, I thought you were going to say, who really needs bikes? Hardworking, award-winning journalists. So, but I'm glad that you clarified.
And then we might have shut off your mic. I'm just going to tell you. No, but it really reminds us, right? These programs, I mean, I don't know. Are we supposed to say it's not going to be perfect? We get it, and there are ways to hopefully fix it. I mean, I don't know. What's the takeaway from this reporting that you did?
I mean, what's interesting is we made it global, right? We put out the call to reporters around the world and came up with amazing stuff. You can get an electric car for free in Germany, but you have to have, over 10,000 euros to spend on the electric car in the first place. You can get $25,000 Australian back for renovating your house in the suburbs of Melbourne, but you have to own a house and you have to have the money to put up to do the renovation, right? These are people with means. This is not getting the money to everybody. From the economists, what we got was really interesting is you can deploy as a government the money in better ways, whether it's through paying everybody a living wage, no matter what, whether they're out of work or not. Cutting everybody's payroll tax, just pumping money directly into the economy rather than doing it piecemeal in ways that might be less equal.
So, I mean, that really brings it to a head, right, Vernon? Like, you can either do these bailout programs that help consumers for purchases of luxury items, let's call them. What, in practice, is anybody got the other thing dialed yet?
No, I mean, essentially, once you're spending trillions, you might as well throw it at everybody. I mean, on the other end, there are the richest families in countries like Italy that were able to borrow billions of dollars that they might not even need to pay back to run their companies. Maybe that's good. Maybe, they don't have to fire workers, but they are benefiting at the top end. People are benefiting at the middle. But, if you have a fire hose of trillions, why not just spread it everywhere? Right. Is the reply that we got.
Yeah, interesting. Well, it is a tour de force of reporting, and I'm glad you mentioned sort of the call that went out to the Empire, because it is a really nice effort that you put together. As always, Vernon Silver joining us from Rome, one of our senior writers at Bloomberg. Just love his work, and it's a way to tell the story that we don't always hear. All right, for those of you listening, go ahead.
No, go ahead, please.
For those of you listening in New York, D.C., San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next, Carol.
I was thinking of Danny Blanchauer, this whole idea of walk around in terms of economics. And that's what our team has been doing on just day to day, walking around and really seeing what's going on.
Or riding around on a bike.
Or riding around.
As you can see, I sold short Japanese yen at 105.917. So let's see where it will lead us. Okay. So position open for Japanese yen.
World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Friday, August 7th. It is a down day with the Dow, the S&P, and NASDAQ off session lows, but red on the screen. Technology leading a decline in stocks as the White House ramps up its confrontation with China, and investors are weighing doubts that lawmakers will be able to agree on a new round of economic stimulus. Here's where we stand. S&P now down 10. That is a drop of 0.3%. The Dow is down 47, lower by 0.2%. NASDAQ is down 139 points, down 1.3%. 10-year down 7/30 seconds. The yield 0.56%. Now gold is down 1.5% at $20.32 the ounce, and West Texas Intermediate crude oil down 1.3%, $41.39 a barrel. Larry Kudlow is head of the National Economic Council, and on Bloomberg Radio and television this morning, he was asked about the state of negotiations on stimulus.
The talks are rather stalemated right now. It was a better tone early this week, but through last evening, there hadn't been any breakthroughs. That's unfortunate. However, the president has said several times in the last 48 hours, and I can attest to it because I'm working on it, he's going to use executive orders, administrative discretion, the full powers of the federal government in order to get certain priorities through.
The gap between black and white joblessness widened slightly in July, indicating the economic recovery continues to be uneven along racial lines, even though labor market conditions are improving across the board. Drillers cut exploration in U.S. oil fields to a 15-year low as some of America's most prolific shale explorers vowed to show restraint amid a stabilization in oil prices. Baker Hughes data says the number of active oil rigs in the U.S. fell by 4 to 176. That is the lowest since 2005. Among some of the big oil names, ExxonMobil shares down 0.7%, BP down 1.9%, EOG Resources down 4.3%, and Pioneer Natural Resources up 1.1%. Recapping equities lower, the Dow, the S&P, and NASDAQ all declining. S&P down 9 now, a drop of 0.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's do a little Business Week economics. We're going to take it from two directions here with our team. Yelena Shalecheva, Senior U.S. Economist for Bloomberg Economics. She's in New York City. Vincent Signorella, Global Macro Strategist for Bloomberg. He's here in White Plains. And, of course, Vince is a contributor to the Global Macro Squawk Desk. Vince, I want to start with you. Do you have power? Are you all good?
I'm good, yeah. You know, I had one quick blip the other day. Just knocked me off for 2 minutes, and then I was back again. So, knock wood, not having the issues that a lot of my neighbors not too far away from me are having.
Yeah, I have neighbors across the street from me here who still don't have power. We were out for about 26 hours. In any case, I'm glad you're safe and well and eyeing that. What's your drink of choice? Vodka later on?
It is these days with the hot summer. I've stepped away from Scotch. Sorry to the JW Black Label folks, but we'll pick that back
No, they're
up
seeing it in the results.
I'm
Don't you
just
worry.
going to say, Yelena, it's like there's no jobs report that happened today. I don't know what's going on with the boys
Well, but
today.
I was sort of getting there from the
Jeez,
perspective of
chop chop, Kelly. Come on.
All right. But I was getting there from the perspective, Vince, that in some ways, if you look at the market, it didn't feel like there was a jobs report to some extent. Because usually we do see a strong reaction one way or the other. So I wonder what folks were saying on the desk.
Yeah, but this is what's going down on the street. We've seen better data. We've seen some good vaccine information that's come out here and there over this past week, and the markets are looking right past it. There's one thing they're looking at is the fiscal stimulus package. The bottom line is, without a package, we're not going to see a recovery in spending. We're not going to see this continued recovery in jobs. And so these numbers, they're backwards looking as far as the market is concerned. They're looking forward. If we don't arrive at a stimulus package, and it looks like it's going to dead in the water at the moment, if we don't get something done in the next week or two, markets are going to step into the third quarter with a really foul taste in their mouth. And I think what we've seen come up, we're likely to see go down going into the election.
Yeah, and Yelena, come on in on this, because rightfully so, right? If we don't, or how do you see it? If we don't get more stimulus, what will ultimately be that economic impact?
One way or another, we will see a slowdown in economic recovery. So the initial stage of rebound is behind us. And today's report actually showed that the pace of job growth is slowing. So with the package, we will continue to see a slowdown, but perhaps it will not be that dramatic. Without a package, it will go right into a negative territory, I think, in the coming months. So the package is absolutely critical, and that's why it is so important for the market. So that could provide additional money for people to spend. And those getting those augmented benefits, they spend them right away. They have high propensity to consume. This money go right into the economy and support consumer spending, support growth in the economy and the labor market. We can see also that the PPP program needs to be extended. That will help save some jobs from being lost. So the more jobs we save now, the easier it will become later on in the later stages of the recovery.
Which is something you and your team have been saying from day one. I mean, Vince, it comes down to that, right? I mean, we talk constantly about this disconnect between, Wall Street and Main Street, but ultimately, if the economy comes undone even more than it has or doesn't have a decent kind of recovery, that will catch up on Wall Street ultimately.
Totally, and especially the financials, because if you get an executive order tonight that says people can't be evicted, well, you're going to have people not being able to pay rents and mortgages, and that's going to weigh on the banks, and then that's going to weigh on financials across the board, and then the economy. I'm putting my faith in politicians in an election year, and that this sort of resembles Paulson going to the Hill in 2008 after the market tanked and the economy tanked, and asking for money and asking for help, and they said no. And then the next day or two, things totally fell out of bed, and they couldn't do what he wanted to fast enough. Right. So I'm kind of hoping that we will see a negative reaction if things fall apart this weekend, but I'm hoping that by the middle of next week, they'll come to their senses and arrive at a consensus. And right now, we're still at about $1 trillion. Pelosi's come down from 3.5 or so to 2. Republicans won't come up from 1. Schumer said even the Senate doesn't have the votes to get under $2 trillion. I think that's just a little bit on the hardball side. I think if they come a little closer, somewhere between 1.5 and 2, they'll be able to get it done. And these days are trillions or billions in Washington. So what's another $750 billion between friends?
No, I mean,
I'm with you. Vince, totally. That I'm also counting on this to be an election year, and in everybody's interest to get this extended. Although going the executive orders route will probably be inferior to the legislation that the Congress reaches a deal. Because they simply cannot appropriate new funds and things like that. So definitely will be better if they do reach a deal next week. And by the way, no power in Long Island either. So that's why I'm in the office. And I'm so excited to be here, actually.
Yeah, is that your first time back, Yelena, or when did you come back?
I was here last week too, I should admit, and it's totally empty, unfortunately.
Yeah, I was there earlier this week. It was a similar situation with no power, and it is.
Jason,
it's a
you
weird
guys,
vibe.
was lecturing particularly his two sons, on like hot showers and how long you could go.
Exactly, on how to conserve power. Don't open the refrigerator, for the love of God. All right, thank you both. Hope you get power back soon, Yelena.
Yeah, have a good
Vince,
weekend, kiddo.
good luck with that vodka later on. It is it's 5 o'clock.
Later
somewhere.
on, I think I heard a clink of ice.
Yeah, the clink of ice, exactly. All right. Coming up, we're going to hear from Henry Kravis. He's going to talk to us. We're going to hear a conversation I had with him earlier about diversity on Wall Street, part of our Bloomberg Equality series, Carol.
What an important conversation, and considering the backdrop of Bloomberg Markets, which I highly recommend everyone check out the latest issue because it is about diversity on Wall Street and some first-person stories, and so you need folks like Henry Kravis and the like to really step up and really look to make a difference, right?
Absolutely, yeah, and he talked about in some of the work he's doing specifically with a group called SEO here in New York. Let's get down to Washington now. That's where we find Nancy Lyons with World and National Headlines. Hey, Nancy.
Hey, Jason, the White House and congressional Democrats are trying one more round of talks today to try to reach an agreement on a fiscal package. But what if they can't cross the finish line? Bloomberg's Nathan Hager takes a look.
If lawmakers in the White House can't reach a deal, President Trump has said he'll act on his own. Greg Vallier with AGF Investments tells Bloomberg Radio the president's options may be limited.
I think the president can stop evictions. He might impose a different type of a tax cut. But when he starts talking about tax changes, I mean, that's the authority of Congress. So I think a lot of this stuff could be litigated.
Without a deal, about 1 in 3 Americans tell a U.S. Census Bureau survey they might not make their August rent payment. The federal moratorium on evictions ran out at the end of last month. Nathan Hager, Bloomberg Radio.
The U.S. is imposing sanctions on officials in China and Hong Kong over crackdowns on protesters. The sanctions include even Hong Kong's top official, Carrie Lam. Treasury Secretary Steve Mnuchin says in a statement the U.S. will use its tools to target those who undermine Hong Kong's autonomy. A longtime advisor to Presidents Gerald Ford and George H.W. Bush has died. Brent Scowcroft was 95. A spokesperson for the late President Bush says Scowcroft died of natural causes. He was the only person to serve as national security advisor to 2 different administrations. Round 2 of the PGA Championship at TPC Harding Park in San Francisco is underway. The leader right now, Lee Hao Tong, at 5 under par. Our coverage begins at 4:15 Wall Street time right here on Bloomberg Radio. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. So to tee up the conversation that we're going to play a bit of that I had with Henry Kravis, part of the Bloomberg Markets story that you referenced, Carol, is featured on the Bloomberg today. Wall Street's top ranks look nothing like the nation they serve. And this sentence, I think, captures it all. The top rung of corporate America looks nothing like the country it serves.
It just kind of breaks my heart. It really does. I mean, black men and women, they make up 1/7 of the U.S. population, but as you said, Jason, badly underrepresented in Wall Street, especially when it comes to corner offices and really across the top levels of investment companies. Elite roles, as our crack team, Max Abelson, Jordan Holman, William Spada, and Daniela Satori wrote, and there's more to that. I love it how they kind of went across the Bloomberg News team for this Bloomberg Market story. And they just talk about elite roles overwhelmingly held by white people. Black executives, we know it. We talk about CEOs. We talk to CEOs. Those S&P 500, those publicly held companies, it's like a handful that are black.
Yeah. So It extends to asset management. It extends to big banks. And interestingly, it's a really good point that they make. And there are a series of charts in this. So check it out on the Bloomberg and at Bloomberg.com. We'll put it out on Twitter as well. But it says U.S. banks have at least two race problems. First, they've often failed to hire or promote black people to top positions. In some companies, black executives have even lost ground in recent years. Second, banking has contributed to income and wealth gaps by withholding credit from black businesses and homeowners and charging them higher rates. So it is systemic, it is structural, and it is widespread and deep.
And think about that. We've talked about this being a poverty problem, a financial problem, and that there's really no opportunity to create generational wealth.
Right.
And that is really holding back, black people largely in our society overall, not just from the higher echelon of Wall Street, but really, Jason, overall. All right,
we've got more about this with Henry Kravitz coming up next. You're listening to Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. Stocks lower. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is with the Friday edition, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading lower today amid weakness in technology. Dow's currently down 47 points. S&P's dropped 9. NASDAQ is lower by 137. FANG stocks down 2.2%. The U.S. 10-year yield at 0.56%. WTI crude futures fall 1.3%. And gold is down 30 points. Leaders to the upside in the Dow, American Express, Travelers, and Raytheon, while Microsoft and Apple led to the downside. In other news, Schumer called the latest meeting for a new stimulus disappointing. Fauci said the Moderna-Pfizer vaccine trial answer may be in November, and Cuomo said that all school districts in New York can reopen. Wrapping things up, UPS plans hefty holiday fees for large shippers. Shares are up 7%. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type SQUAWK, S-Q-U-A-W-K, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie. Well, earlier in the week, yesterday, in fact, was the Bloomberg Equality Summit, the latest edition, and it was all about race on Wall Street, trying to make some significant changes. And I was fortunate to catch up with Henry Kravis. He is the co-chairman, co-CEO, co-founder at KKR, the private equity firm, been around for 40-plus years. It bears his name and that of his cousin, George Roberts, and Jerome Kohlberg, their fellow founding partner. I also was joined by William Goodloe. He's the president and CEO of SEO. That is a group that works with people like Henry Kravis, who is the chairman of that group, to basically prepare folks who come from more diverse backgrounds to work on Wall Street. Here is what Henry Kravis had to say.
We're behind. Wall Street's behind. The C-suite is behind. We've all been slow in recognizing the problem and doing something about it. I really believe that maybe now, for a change, we have the opportunity to make a big difference. There's no question the numbers are bleak. You can look anywhere. There's no way that the corporations and Wall Street firms have not hired the diverse candidates equal to or in excess of the percentage of the black population in America. That's 13%. None of us have that. But we have a long way to go, and I really believe that we will. But let me just say, it starts at the top. If the CEO of any company, whether it be Wall Street or C-suite, has made a decision that they're going to make a change, and they really are going to now make a difference, it will happen. We all have to overcome, in my view, the unconscious biasness that exists everywhere. You know, if you think about what we all go through every day, the slight injustices that minorities face every day is incredible. These slight injustices, white executives don't face. And so we've got to be patient. We've got to make a decision that we're going to change this. And it starts maybe not only with the CEO, but it starts with boards of directors. So if the board of directors is a diverse board of directors for any company, you'll start to have a change. Let me give you an example. Okay, at KKR, we made a decision about 2 years ago that we were going to change the makeup of the boards of all the companies that we controlled. And we had a goal to get to over 100 diverse board members in our portfolio companies. And I'm happy to say we got there. So now what we have to do, we've got to increase the hiring. It's not just the hiring, but it's the training. It's being patient and working with diverse candidates that come in. So we have a long way to go, But if you make up your mind that you can do it, you'll do it. You'll get it done.
So let's talk about getting it done. And William Goodloe, you are the CEO of SEO. And for anyone who's been paying attention to Bloomberg this week, the cover story of Bloomberg Markets featured an incredibly powerful series of conversations. And as I talk to people about those conversations, there are a number of alumni of your organization there, William, talking about their experiences, talking about them in a very honest way. Help us understand what SEO does, especially when it comes to changing the face of Wall Street.
It goes back to SEO's founding in 1963, founded with a mission to create a more equitable society. And that's at every level, including the highest economic levels of society, because we know that talent is widely distributed and yet it's unevenly developed. And if there's one takeaway we hope your audience takes, is that SEO is in the talent development business. And we've been doing it for 57 years. Unfortunately, the murder of George Floyd brought more attention to some of the inequities in society, and we needed the protests to bring that attention to it. But the real change will come when we change the systems and the structures, and that's what SEO has been doing. Each year, we serve over 4,000 young people, overwhelmingly Black and Latinx, and we address systemic inequities through 4 different programs. SEO's founding program, the Scholars Program, serves high school and college students, 2,000 from New York City public schools alone. From grades 9 through 12, students attend several hundred hours of intense SEO academic classes while still attending their public schools. By 12th grade, students are truly academically prepared for college level work. But SEO doesn't stop there. We provide comprehensive support for students throughout college, and 90% earn a college degree versus 20% for similar students from low-income backgrounds nationally.
And that is William Goodloe, the CEO of SEO, joined by Henry Kravis, of course, the co-founder, co-chairman, and co-CEO of KKR. Carol?
Yeah, great conversation. I think the more and more that we talk about this and we hear from the likes of someone like Henry Kravis or William Goodloe, we get an idea of what's going on. We also get an idea of what the problems are and what still needs to be done. But I think we've got to make sure that this conversation continues to happen, Jason.
Well, and it starts at the top, as Henry said. And that board of directors piece, I think, is really important because the governance of companies, it's got to change. You're listening to Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. Right?
Yeah.
Bloomberg Business Week on this Friday. Getting excited. You're heading on vacation very soon.
I'm excited for that. I'm really excited for the chart of the day and the song of the day.
It's
We
like,
know it's not going to be Dancing Queen. That's all we know.
He's already told. I know. We're going to get him there. We're going to get him there. All right, Dave Wilson's going to join us in just a moment. Let's get back to Charlie Pellet. Charlie, we keep trying to get Dancing Queen for you.
And I appreciate that. Maybe at a wedding, bar mitzvah, who knows. Here's what's going on. We've got the Dow, the S&P, NASDAQ. They're all lower. 28 minutes to go ahead of the close here. Technology leading today's declines as the White House ramps up its confrontation with China and investors weighing doubts that lawmakers will be able to agree on a new round of economic stimulus. Right now, the S&P is down 11, drop there of 0.3%. We've got the Dow lower by 66 points now, a drop there of 0.2%. NASDAQ lower by 143, down by 1.3%. Should point out, looks like we will be on track for the second winning week in a row for the U.S. stock market, fifth up week in the last 6 weeks. We've got the 10-year now at 0.56%, down 8.30 seconds. Gold down 1.4% at 2,034 for spot gold. West Texas Intermediate crude down 1.1%, 41.49 a barrel. Shares of UPS are moving higher. United Parcel Service will apply hefty surcharges on its biggest customers during the holiday peak season to help manage an avalanche of residential deliveries spurred by the coronavirus pandemic. Shares of UPS, they're up on a down day for the rest of the market by 7.3%. FedEx shares, they're up now by 6%. 3:32 on Wall Street. Time now for the Small Business Report. Here's John Tucker.
Today we head to New Hampshire, about 20 miles outside of Manchester, where we find Middle Branch Farm. Roger Noonan and his daughter run this certified organic family farm. The pandemic has changed life here, too. Roger joins us now. You and your daughter had some big plans to branch out into agritourism. Is that still happening?
So we had planned on this year was the year we were going to do, short-term rentals or Airbnb, perhaps, and on-farm events. That was the plan. I think my daughter had a couple of weddings planned for October. Those have since been canceled.
You put those future business plans on hold. At your core, you're still a vegetable farm, so how's that core business been impacted?
Well, I'd say the first impact we had was supply issues. We were scrambling to find, certain seeds and certain supplies. There was a real shortage of things and just a real bottleneck in the supply line when that happened across many industries.
Yeah, you do community support agriculture. Customers have a subscription, basically. They come to the farm, get veggies for a 16-week period. That must have changed.
So now everything, instead of coming up to the barn and there'll be, bins of this and bins of that, and you take, 2 of this and 3 of that, everything is got to be pre-bagged. And packaging costs money. And again, going back to the supply chain, there were delays in getting things like packaging because, thousands of farms were scrambling for the same thing.
In addition to that, what other challenges have you had to face?
The contraction of additional markets. She had a pretty good restaurant trade, which is not totally dried up, but significantly reduced.
All right, Roger Noonan at Middle Branch Farm in New Boston, New Hampshire. Thanks very much. And that is today's Bloomberg Small Business Report.
And John Tucker, we thank you very much. Again, recapping here, equities lower, the S&P down 7, down 0.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Right here on Bloomberg Radio. I'm deferring to you on this one, Nasser.
Man, is this, I'm thinking this is like 60s, 70s? Is this Sly and the Family Stone?
Congratulations.
Hey, look at that.
Nasser is a star.
I love their sound. It's just great.
Yeah.
It's a great era.
That is super impressive.
When you finally heard Sly Stone's voice.
Yeah, like at first I wasn't quite sure. Very cool, Dave. This is
well
that's
done, Carol Masser. Just crushed it here on a Friday.
Thank you. I think it's that extra cup of tea I had or something.
Oh boy.
So Dave, connect it with the chart.
Well,
Great song.
everybody is, of course, a relative term. But, you know, for a whole lot of people, the stars in the U.S. stock market come down to maybe 5 companies. The FANGs, if you use the 2 A's. You know, Facebook, Amazon, Apple, Netflix, Google's owner, Alphabet. And Jim Paulson over at the Luthold Group, who's their chief investment strategist, kind of took on that idea in a report yesterday. It basically concluded that what we've seen since March is really a broader-based advance than you might think just from looking at the dominance of those FANG stocks. And a comparison he made that kind of got my attention was between the Value Line Arithmetic Index. It includes about 1,700 companies that Value Line covers in terms of research, and each one has an equal weight. So it's not like, you know, the Apples and the Amazons of the world dominate the index. You compare that with the S&P 500 Growth Index, where if you take those 5 companies and throw in Microsoft, they're 39% of the index between them. So heavily influenced by the big tech companies. And which index actually did better since stocks reached their lows in March? As it happens, the Value Line Index.
That's
As
interesting.
of yesterday, it was up 64% over that period.
Right.
Whereas the S&P 500 Growth Index was up 59%. Now, there are all kinds of ways you can slice and dice the market, and some of them suggest that, you know, what we've seen lately is just the bigger companies, not the smaller ones. But here's a comparison that tells an entirely different story, which is what got my attention. And, you know, Paulson concludes what we're seeing now is, quote, a pretty standard broad-based bull run, end quote. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
What's your view on that and that way of dicing and slicing the markets, Dave, to tell the story?
I mean, there are other ways you can kind of look at this. S&P 500 equal weight index is one way to do it. And there are all kinds of ways that you can kind of get a broader look, perhaps, at how the market's performing. And, you know, it becomes more worthwhile to make that comparison. And actually, you see the equal weight indexes, you know, sort of holding their own, as is the case with this Value Line Arithmetic Index. So it's not really an exception as much as, you know, if you look, say, at the S&P 500, you can say, okay, it's 5 or 6 companies and everybody else is trailing.
Makes it smarter. We need to get Barry Ritholtz in here and maybe Mr. Luthold because they, you know, these two things would be an interesting kind of debate, right?
Absolutely. And I'm sure Jim Paulson would be up for it.
Yeah. We need
There
to do
you
that.
go. All right, Dave Wilson, thank you so much. We're going to check in with you in about 20, 25 minutes for your stock of the day as well.
A really good mix.
Yeah, you're just riding high because you got the song right.
I know.
You feel good about that.
And it's Friday.
And you
and
should.
I'm
It's
having
great.
A great
It's a nice way to
sandwich,
go into the weekend. All right, let's head down to Washington. Nancy Lyons is there with World National Headlines. Hey, Nancy.
Hey, Jason. Negotiations are underway again in hopes of reaching a deal on a coronavirus stimulus bill. House Speaker Nancy Pelosi says she's offered to meet Treasury Secretary Steve Mnuchin and White House Chief of Staff Mark Meadows halfway.
Yesterday, I offered to them, we'll take down $1 trillion if you add $1 trillion in. They said absolutely not. If we could do that, if we take down $1 trillion and they add $1 trillion, we'll be within range.
Mnuchin called that offer a non-starter. President Trump has said without a deal, he'll act unilaterally to extend enhanced unemployment benefits, impose a payroll tax holiday, and restore a moratorium on evictions. Well, school may return to normal this fall in New York. Governor Andrew Cuomo says the state's infection rate is low enough that all school districts are free to open in September.
We are probably in the best situation in the country right now, as incredible as that is. So if anybody can open schools, we can open schools.
Many New York school districts have planned to start the year with students in school buildings only a few days a week, while learning at home the rest of the time. An Air India Express plane with 195 passengers and crew overshot the runway while attempting to land at a southern Indian airport. Officials say at least 16 are dead. Round 2 of the PGA Championship at TPC Harding Park in San Francisco is underway. The leader is Lee Hao Tong, who has finished both rounds. He stands at 8 under. Tiger Woods is still waiting to tee off. Our coverage begins at 4:15 Wall Street time right here on Bloomberg Radio. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. All right, we were going to talk about Goldman earnings because they had to slash their quarterly profit, but we're calling an audible here.
Totally.
Because we have to talk about this. I actually just sent this story to a friend of mine from Wall Street who lives in Darien, Connecticut. The picture alone is amazing on this story. It's one of the most read on the Bloomberg. Basically, the power was out, and so all these Wall Streeters who've been working from home in Darien, Connecticut, they are literally sitting outside of the Darien Public Library, like sucking up the Wi-Fi, getting deals done.
Yeah, it wasn't
Don't you
about,
love
hey,
it?
I want to learn a little bit more about the Dewey Decimal. No, it wasn't about that. It was like, can I just have some of your Wi-Fi?
I need some Wi-Fi. Yeah.
It's hysterical. This said about 20 people working outside the local library at 6 a.m., 3 hours before it even opened, that folks were out there. It was one of the only places in town with power, and some arrived with beach chairs. Others wore suits for Zoom meetings. One trader actually set up his desk with 2 monitors at a picnic table, capitalizing on the wireless internet access outside the library building. That is just, oh my God, that is out of billions.
Yeah, totally.
Right?
Yeah, 100%. Listen, I mean, we've talked to friends who, I have a socially distanced friend working in the other office in our home right now because our power's out.
Oh, in your home?
In my home.
Oh my
exactly.
God, that's so funny.
Someone in our social bubble. Yeah.
Because of the power.
It's happening.
And it's
all happening because it's very sporadic, the power outages, and everybody's working from home, so they can't go to the office. Yes.
A real estate executive had to work out of
me.
his Tesla on Wednesday, driving around Greenwich to find cellular service. A banker in Darien, meantime, had to turn off his wine refrigerator in order to preserve his generator's power for the computer. He eventually found himself at the library. That is so on billions.
That is the note for billions. It's like unplug the wine cellar refrigerator. Yeah, checks out.
Wah,
Right.
wah,
It's
wah.
your most read. We'll put it out on Twitter. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Turnaround for the U.S. stock market since our last update. The Dow, the S&P, they're both higher right now. We've got NASDAQ still trading lower. Technology is down as the White House ramps up its confrontation with China. Investors, meanwhile, weighing doubts that lawmakers will be able to agree on a new round of economic stimulus. But with 13 minutes to go, we've got the S&P up by about 2 points. Little changed, up less than 0.1%. But green on the screen. Got to stay with Bloomberg to see where we wind up ending the Friday trading session. Dow Jones Industrial Average up 43 right now, higher by 0.2%. 10-year yield 0.56% this Friday. Gold is down 1.4% at $2,034 the ounce, down $28 the ounce right now. And West Texas Intermediate crude down 1%, 41.53 a barrel. Recapping, stocks reverse course, S&P higher, up 2 now. That is a gain of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, it is time for the drive to the close on this Friday to wrap up the trading week. Let's break it down with Jim Lowell, Chief Investment Officer of Advisor Investments. They're looking after a little more than $5 billion. Joining us on the phone from Needham, Massachusetts. Jim, how are you? How are things up in the greater Boston area?
They're doing just fine. Obviously, we live in crazy times, not just in terms of COVID-19, but obviously in an election year and with a market that's probably way ahead of the medical facts. We think now's a very good time to stay rational, calm, collected, and, of course, disciplined.
That is a great place to start. What does rational mean then? Does it mean gold, which has been on a tear? Does it mean cash and, under the mattress? What does it really mean, Jim?
Well, you certainly could have some cash on hand. We think it's wise, both as a buffer for what we suspect will be increased volatility as we get closer to the election, but also as some dry powder for opportunities that may manifest themselves along the way. If, of course, we get a vaccine, all bets are suddenly going to be on the economy being able to weather the storm, the COVID storm, better than it will without it. But we also have been noticing gold. Certainly, our tactical models have been picking up on the gold trend. Our view is that gold is a very poor long-term hold, but there are periods where it can give investors not just emotional comfort, but even tactical return advantage. Gold, of course, occupies that paradoxical space where investors tend to like it when they think the economy is going to heck, and they also tend to like it when they think the economy is overheating. We think we're probably in between those two moments, and while we do think gold may have a little bit of room to run, maybe even into next year, we would be very cautious about recommending it to anyone other than as a speculative bet.
Jim, talk to me about China, because we've talked a lot about it this week, sort of I was going to say tactical way, but in a very specific way as it relates to TikTok and now more recently what's going on with Tencent. And I mean, the rhetoric is certainly being amplified, but these are some real actions potentially that are being taken. Does that give you pause when you think about any exposure to China? How do you figure that into an investment thesis?
So it's an excellent question, and we have been cautiously moving our gaze onto China, actually having a small stake in some China-oriented positions inside of the actively managed funds that we own. We think that the rhetoric is likely never going to die down, but the major trend, I think, is that in my lifetime, I'm 60 years old, we've moved from an outright belief in a global economy to really a duopoly, U.S.-China. with every other country effectively playing second or third fiddle, some not even making it to Bandcamp. So we think you want to have some China exposure, you want to have U.S. exposure, but we suspect that there will be clashes along the road in any given year, whether it's an election year, whether it's a Republican or Democratic president. China's been a hard country to bring to the bargaining table in any real way. All that said and done, it has grown its own economy better and better over the past decade, to the point where we think there are some attractive opportunities.
Which are what?
Well, we definitely think that if you're looking inside of China, you want to look at brands that Chinese consumers tend to want to own. Our first interest in China was really from an investment angle, was perked by Apple and wondering whether or not Brand America products were going to get hurt by China's social ranking system based on consumer purchasing behavior. And what we saw was an opportunity in brand China for the Chinese consumers. So we like technology and consumer-related sectors inside of China's economy. Here at home, we continue to love the battleship balance sheets of blue-chip dividend growers, and healthcare remains a significant overweight in our portfolios.
Talk to me more about healthcare, because obviously so much focus on so many aspects of that, but healthcare is a big bucket. Drill down a level if you can.
Healthcare is effectively 20+% of our economy. So you're right, it is the biggest bucket in our economy. And when you look at the demographic demand from our aging population, that of Japan, that of Europe, there's obviously a necessary demand for more and less invasive ways to treat a whole host of illnesses for an aging population. But then you also have emerging market demand, where consumers are finally able to demand first any health care and then more and better ways to treat themselves through health care. So we think that it is a sector that has long-term benefits. Its risk-adjusted return profile is stellar. I would also say that when you look at health care, it is increasingly correlated to what's going on the innovation side of the technology hub, which we also like. And so inside of healthcare, you get a great risk-adjusted, necessary demand story with some real innovation.
Hey, you know, on the healthcare side, Jim, Jason and I have had conversations with a lot of, as you would expect because of the virus, you know, healthcare professionals, people who are running, you know, massive healthcare systems. One of the things they say is that we are increasingly and need to, but already slowly starting to move towards a system that's more about keeping folks well. We've talked about it a lot. We still have a long way to go, rather than, you know, people coming in when everything's wrong, but rather, you know, this focus on keeping everybody well. Is that an investment play that you're thinking about seriously and making bets on, or you're kind of waiting to see how it works out?
Well, I would say it's kind of like thinking about investing in solar. If you own the major oils, you own big stakes of solar power inside of their holdings. If you look at the HMOs, if you look at insurance companies, they're really trying to figure out ways to, as you say, help us live more healthfully. Not because they want us all necessarily to live more healthfully, but it's significantly better for their bottom line. And of course, you know, tragically inside of COVID-19, what we see is just take the simple issue of obesity, having a higher morbidity rate with regard to COVID-19. So I think as a culture, this may be a turning point where we really all do look to live more healthfully. But you know, don't tell that to Kraft mac and cheese.
Right. Yeah.
Or Oreos.
Yeah, Oreos. We've gone long Oreos during this pandemic. All right, Jim Lowell, Chief Investment Officer for Advisor Investments, joining us on the phone from Needham, Massachusetts, and we are coming up on the close of trading for the week, Karen.
Yeah, and as Charlie mentioned, Jason, we are seeing a little bit of an uptick in stocks. We're pretty much going to finish, at least for the S&P and Dow, just off our highs of the session. So we'll have those closing numbers for the day, for the week, and a look at some of the movers and shakers. Stick around. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Friday, August 7th, and it is on to the weekend with the Dow higher, S&P eking out a gain, swinging between gains and losses just as the bell was clanging there. Looks like a 2-point gain on the S&P right now, up by less than 0.1%. Down day for the NASDAQ Composite Index. Tech stocks taking us lower. Right now we have got NASDAQ lower by 0.9%. So turned out to be a mixed session, but just want to bring you this headline from the Bloomberg Professional Service. Princeton switching to an all-remote undergraduate program for the fall, making that call moments ago. Princeton switching to an all-remote undergrad program this fall. Again, turned out to be a mixed session. The 10-year, the yield there 0.56%. Gold down 1.5% at $2,031 the ounce. West Texas Intermediate crude lower today by 1%. Stocks did decline today as the White House, actually the S&P higher, NASDAQ lower as the White House ramped up its confrontation with China, and investors weighed doubts that lawmakers will be able to agree on a new round of economic stimulus. Now, as for the market backdrop, Jim Lowell is Chief Investment Officer at Advisor Investments. He was our guest moments ago right here on Bloomberg Business Week.
Obviously, we live in crazy times, not just in terms of COVID-19, but obviously in an election year and with a market that's probably way ahead of the medical facts. We think now's a very good time to stay rational, calm, collected, and, of course, disciplined.
After earnings, Yelp shares plunged. Second quarter revenue was lower because of coronavirus-related restrictions weighing on business advertising. Analysts expect those challenges to linger until a vaccine is available. Yelp lower today by 17.9%. Also dropping after earnings, Uber down 5.2%. San Francisco crosstown rival Lyft also declined by 6.5%. Gold down 1.5%, 20.31 the ounce. Recapping, S&P up 2 points. I'm Charlie Pellet. It's a Bloomberg Business Flash.
Whoa, yeah, what I say.
Your next move will be your last.
Nobody move a muscle.
Damn, Stippy, you got some moves.
And I'm moving on from town to town.
Time is money. Let's go. Come on, move it.
Shake it up. Shake it up.
Bloomberg Business Week. Movers and Shakers with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, everybody, let's shake it up a little bit. Let's see how equities, U.S. equities in particular, did during this week. Charlie breaking down those closing numbers for the major equity averages on this Friday. Dow and S&P just off their highs. NASDAQ, though, a little bit of a different story. What did it mean, though, for the week overall? Check this out. Dow Jones in the past 5 days up 3.8%. S&P up about 2.5% this week. And same story for the NASDAQ, Jason, up about 2.5%. So, again, another week where we continue to see gains. I think a lot of it is on expectations, fingers crossed, and hopes about more of a relief package, another relief package coming out of Washington. Outperformers this week, financials up 2.2%. Top of the pack, utilities were up about 1.75%. Industrials up 1.7%. Losing a little bit of ground this week, information technology down about 1.6%.
So, year to date, have you looked at this lately?
Which one? For the
year to date for the major U.S. indices. NASDAQ's up almost 23%, WOA. S&P is now in the green, up 3.7% for the year. I think it went into the green last week, just barely, but now with that run that you mentioned for this week, now I wouldn't say it's firmly in the green, but it's up 3.7%. And the Dow is only down about 3.9% for the year, and it just continues. I don't think we can say this enough. This is not the economy, and you mentioned earlier, the walk-around economy gives you a very, very different picture than if you are looking at a Bloomberg screen or any sort of measure of stocks, or even your 401k, candidly. I mean, if you were to just tune out the world and look at your 401k, you'd be like, cool, great year so far. How's everybody doing?
Right. Like if that's all you had, right? If you knew nothing else, be like, wow, we're on fire.
Yeah. So it's really, I mean, and we know why this is. I mean, we have a sense of why it is, in part because you've got several big companies who are driving those figures higher and driving those markets higher. But you do also have some individual stocks, and let's talk about a few of them even today. One of your biggest gainers, UPS. Now, UPS is a company that, they're having some issues during the pandemic, just getting stuff delivered and, having to deal with a massive workforce and things like that. But investors are essentially happy, as far as I can tell, Carol, that they came out and said, we're going to bump up some fees, especially for large shippers, as the holiday season approaches. And so if you're an investor, you're thinking, okay, cool. That's going to help with margins. That's going to help with the bottom line, ultimately.
Yeah, absolutely. Right.
And people are getting a lot of stuff delivered, let's be honest.
No, exactly. And I think the system was, no doubt about it, kind of stressed initially, but if they're able to, if they have that leverage and power where they can charge more, that says something certainly about their business, but says about, like you said, we're all getting deliveries. That's one thing like we are all counting on at this point. So it's really, really important. Hey, you were talking about, you were looking at the market returns so far in 2020. The S&P has bounced 50% from that low.
From that March low.
Yeah, March
23rd is over.
Yeah, and I probably, if I took a look at each of the indexes, it's going to be, let me just take a look at the NASDAQ, because that has had an incredible rise. It's up 60% from kind of the March lows. So pretty remarkable.
Just quickly on the other side, one of the losers to pay attention to, Activision Blizzard. It's a name that we track pretty closely, and that's in part because all of this turmoil going on with Tencent. Tencent has a very close relationship with Activision Blizzard, so that's going to ripple through. We're going to keep an eye on that story, because as that sort of schism continues, it could have an effect on some names. Want to do the VIX?
Yep, let's do the VIX. The VIX, no surprise, maybe to see it back off again today, down about 2%. The VIX closing at 22.19. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson. Open up the doors, Dave! Who? Dave!
Hey, Mr. Wilson. Dave Wilson back with us. What's your stock of the day?
Stamps.com, Jason. It's a company that enables customers to buy U.S. postage without having to go to the post office. The company also provides mailing and shipping services. Stamps.com was founded in 1996 and went public in 1999. The ticker is STMP. The company's shares surged at first and then plunged. They didn't really start to recover until 2015. Since then, they've been way up, way down, and then back up again. Stamps.com's latest advance began in February and led to a series of records for the stock. The latest followed the release of fiscal second quarter results late yesterday, which showed the company benefited from a coronavirus-driven shift to e-commerce. Stamps.com's earnings were more than triple analysts' average estimate in a Bloomberg survey. Sales beat the average projection by about 44%, the most in more than a decade, and the company raised annual forecast. You put that all together, Stamps.com rose above $300 a share for the first time. The stock closed with a gain of about 18%, which was the biggest since February.
How crazy is that? When we increasingly talk about kind of where our economy's going, and yet, check that out. It's up 270% this year.
Yeah, it certainly fits the
Right?
theme. You don't have to go stand in line at the post office.
Yeah, exactly. You're working from home. I mean, they do a lot of advertising on podcasts and things like that, so I hear them.
But do you guys mail a lot of stuff?
No, not a lot, but, if you're somebody who has sort of a small online business or even a bigger online business, Stamps.com is an option because they provide that kind of service.
There you go. Well, if you're listening in New York, Washington, D.C., or San Francisco, thank you, Dave Wilson. Stand by. We'll bring you live play-by-play coverage of the PGA Tournament, the PGA Championship, coming your way at 4:15 p.m. Wall Street time. If you're listening on SiriusXM, stay with us. We are going to be chatting with Paul Rabel and Dr. Ian Lustbader, and we're going to talk about at-home fitness. We've got so much coming up, so you're going to want to tune into that. Where it's
the Friday Friends show.
Friday Friends of the show.
We don't need Jennifer Aniston. We don't need Lisa Kudrow.
Exactly. We just need Paul Rabel and Ian Lustbader.
That's all we need.
Cool. All right. First up, let's get to Denise Pellegrini. She's got world national headlines. Hey, Denise.
You don't need me. You've got Paul Ravel. Come on. But we do have a lot of posturing, but not much progress in those talks between Democratic leadership and top White House officials on new pandemic stimulus. Democrats offered a concession. Republicans are calling that a non-starter. Surprise. And White House economic advisor Larry Kudlow says President Trump could take action on his own.
What the president believes is several things, and he will use his executive authority to get there because we can't seem to reach a compromise with the other team. Namely, he will use executive authority to cut the payroll tax for the workforce, which will give them more take-home pay and will be an incentive for people out of work to come back to work.
And when Treasury Secretary came out of a meeting with Democrats a few minutes ago, he said he thinks Trump should do some of those things with executive action. CIA officials say Russia is making a concerted effort to denigrate Joe Biden. The U.S. counterintelligence chief William Evanina also saying individuals linked to the Kremlin are boosting President Trump's re-election bid. Sound familiar, right? U.S. officials also say China's government doesn't want President Trump to win a second term. More than a dozen people are dead after an Air India plane carrying nearly 200 passengers overshot the runway at an airport in southern India. It was raining heavily at the time. And power companies in New Jersey are telling some customers they may not get power back until Monday. In Connecticut, some local officials say it could be Tuesday. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. Well, on a day when Governor Andrew Cuomo said, hey, kids can go back to school in New York State, obviously elementary and high school, Princeton, one of the most prestigious universities in the country, safe to say. They're like, remember when we said you could come back to campus? Psych, you're staying home, online only.
Ouch. Listen, I'm not surprised. You're right. Princeton coming out and saying classes will not be held in person because of the pandemic. They say in light of the diminished benefits and increased risks currently associated with residential education amid New Jersey's battle against the pandemic, we have decided that our undergraduate program should be fully remote in the fall semester of 2020. So that's the undergraduate program. I can't tell. Does that mean graduate programs are still on campus?
Yeah, I don't know. Based on this story, we'll have to dig into that and see. I do know that, I mean, it's so hard. I have to say, you need a scorecard to keep up with what various colleges and universities are doing because one to the next, it's a mix. And by the way, it changes day to day.
I also think for undergraduates, it's a little, I mean, I feel for them because, you know, especially your freshman year, you want to be on campus, you want to get a feel of it. But you've got people coming from all over. You're talking about, whereas I think some of the undergraduate programs, you might have people who are actually living in the area. You know what I mean?
The graduate programs.
I mean, forgive me. Yes, the graduate programs. I'm thinking there's probably people who are actually living there, you know, or just off campus.
Right.
So they're part of the community, so it's kind of a safer play. Whereas undergraduates, they literally come from all over the world.
Well, and, you know, I know of a number of families where the kids are getting tested before they go back to school. You know, I believe Notre Dame kids are going back if they're not already back. I believe, what's today? August 7th? Yeah, August 10th, I think, is when they're going back. I have another friend whose daughter went to get tested. She tested positive, so now she's got to quarantine before she goes back. Like, it's all, it's a mess, I have to say.
Well, and we talked with the dean of the Fuqua Business School at Duke University, right? And they talked about how much testing that they're going to be doing on an ongoing basis as they do kind of a hybrid program. Exactly. You're listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Tech stocks slumped as small cap shares gained. Gold fell today. Let's begin there with gold down 1.8%. Spot gold now at $20.30 the ounce, falling by almost $33. The S&P 500 index eking out a 2-point gain right at the close there, up by about 0.1%. The Dow up 46, higher by 0.2%. Nasdaq had a down day, dropping 97 points, down by about 0.9%. Tech shares fell as the White House ramped up its confrontation with China, while a better-than-forecast jobs report helped fuel advances for smaller companies. Gold, as I mentioned, lower by 1.6%. Crude, West Texas Intermediate down 1%, 41.52 a barrel, and the 10-year down 8/30 seconds. The yield there 0.56%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser here with you. And earlier in the week, as we have pointed out, we caught up, and by we, I mean David Weston, caught up with Dr. Anthony Fauci, of course, one of the main voices the whole country has looked to in terms of where we are on this virus. So to set up our next conversation, let's hear a little bit of what he had to say.
The classical history of viruses, particularly respiratory viruses, are such that if they are going to be something that is as capable as this virus is of efficiently spreading from human to human, ultimately, if you really want to put the nail in the coffin of an outbreak, you're going to need a vaccine.
Comes down to a vaccine. Let's bring in Dr. Ian Lustbader. He is Clinical Associate Professor of Medicine at NYU Langone Medical Center. He joins us on the phone in New York City. Dr. Lustbader, nice to have you back with Jason and myself.
It's Friend of the Show Friday.
It is. We said it was Friend of the Show Friday, and you are certainly one of them. And we do always truly look forward to touching base with you. So you heard it from Dr. Fauci, who talked with our David Weston. It is ultimately about a vaccine. Is that really ultimately how we get control of this? Because I know we've talked, Jason and I, with you about treatments, that it's kind of, multi-layered here.
Exactly. Always a pleasure to be with you. And Carol, welcome back. Hope you had a good vacation.
Thank you.
Back at the helm. So Dr. Fauci, I think, is right, as he often is, that this really will take several approaches. In addition to saying ultimately we need an effective vaccine, which is coming closer and closer. Phase 3 studies, tens of thousands of people will be tested. And we really think that certainly December, January, February, somewhere in that range, it will be available. Of course, you need manufacturing ramped up and you need people to take it. And even if people take it, Dr. Fauci was recently talking about how effective it is. We know the flu shot we give every year. There's not a universal one-time flu shot. We give it every year because it mutates. And even that vaccine is really only about 20 to 30% effective. Same for the coronavirus, the COVID-19 vaccine, we think. Hopefully it will be very effective in the 95% range, but it may not be. In other words, it will not necessarily protect everyone. So we still need to work on prevention. We will need masks and social isolation for a time until this really runs its course. Even the Spanish flu eventually disappeared after 2 to 3 years, and so we're not quite coming up on a year, but eventually we will conquer this.
So it could be a couple of years, though, then, or it could be 2 years potentially, right, for it to really kind of work its way through society and get out.
Absolutely. If the virus mutates, and it has already mutated, we have to see how effective those vaccines are. Are they going to be 90%? Are they going to be 50%? Even 50% would be very helpful. And again, what we need to see is how long these neutralizing antibodies last. I see patients in the office who've had COVID who have antibodies, and they are often on board to say, look, we know these antibodies may not last. We will take the vaccine when it's available. And I think we need to have that mindset.
So, Ian, the big headlines today, as you know, in New York City at least, are around back to school and the governor of New York basically giving the go-ahead. But sort of punting a little bit or pushing it to local districts and cities and municipalities to make the call. As you look at the math, as you know so intimately this area, what's the smartest, safest approach, assuming these levels sort of stay where they are?
Right. This is really uncharted territory, and there are regional variations. We know, fortunately, in New York, the numbers are down dramatically. There are other parts of the country that it's up. Fortunately, death rates are down, probably for a combination of reasons, medications and care and so forth. But certainly the total number of cases is only rising. And you've got kids going to college, I do, and, there's always a concern. The good news, in part, is that young people tend to do better, not 100%, but definitely better. And I think eventually there will be smaller cohorts of kids. They may have rotating classes. They may have some hybrid with home learning. And definitely it's reasonable to do nasal swabs, or a spit test is a lot less invasive if that's available, to certainly reassure the students and the faculty that it's safe. Those are not 100%. We all have patients that we see where they have classic symptoms. You do a swab, it's negative. They continue to not feel well, do another swab, and it's positive. And you also get false positives. Sometimes we see in governors out there where they get tested, and you get
yesterday.
these happened yesterday where you get a positive, which may be either a test issue, or another cross-reactivity to another virus, and someone doesn't really have it. So all of this is imperfect. You can only reduce risk. You can never eliminate risk. But at the end of the day, we do slowly need to get back, and I do support going back to school, in a judicious way.
Do you feel like, and we've just got about 30, 40 seconds, and then we'll do some news and then come back, but do you feel like schools can do it, especially like in New York City, where the numbers are down so much, do it safely with social distancing, with masks, and with a lot of hand washing?
I think they can. I think it can be done safely, certainly with warmer weather and keeping windows open and good airflow. In the middle of the winter, when it's cold and classrooms are more closed up, I think the risk probably will go up, and we may need to have longer school days and partial days for kids so they're not all clustered together.
Right. All right. Stick with us. We're going to continue our conversation with Dr. Ian Lustbader, Clinical Associate Professor of Medicine over at NYU's Langone Medical Center, our go-to guy, especially on Fridays as we go into the weekend. I feel like there's always a nugget that I, talk about to my family or to friends when I'm socially distanced visiting in the street. In any case, you're listening to Bloomberg Business Week.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. You're listening to Bloomberg Business Week. It is Friday. Carol Master along with Jason Kelly. We're going to get back to Dr. Ian Lustbader over at NYU Langone Medical Center. We're talking with him about the virus, about treatments. I'm curious, too, about what's going on in the hospital right now and if people are increasingly going on for those kind of routine treatments.
Yeah, absolutely. So many questions for Ian every time we get him on the phone. We're going to get back to Ian in a minute, but first let's get back to Charlie Pellet. He's got an update on the headlines. Hey, Charlie.
Well, I thank you very much. Very healthy week for the bulls with the Dow, the S&P, and NASDAQ all rallying this week. Let's begin with the weekly numbers. Tell you what happened today in just a moment. On the week, S&P up 2.5%. The Dow this week up by 3.8%. NASDAQ saw a 2.5% gain this week. Today, though, mixed picture. S&P did push higher into the close, touch and go there, but eking out a 2-point gain, finishing the week, heading into the weekend at 33.51, up by just under 0.1%. The Dow today rallied 46 points, turning around earlier losses, up 0.2%. NASDAQ fell 97 points for the NASDAQ Composite Index. That was a drop today of about 0.9%. 10-year yield 0.56%. Gold retreating today, down 1.6%, ending the week above $2,000 the ounce at 2,031. West Texas Intermediate crude down 1%, 41.54 a barrel. Today we did get that better than forecast jobs report that helped fuel advances for smaller companies. Reacting to the jobs report, here's Anastasia Amorosa, who's head of cross-asset thematic strategy at JP Morgan Chase Bank.
Of course, this was for the month of July, where we did see the virus activity spike across the United States, except for the Northeast, and we saw some rollback of the reopening. But this jobs report really tells you that despite the fact that we still have not managed to control and contain the virus, the economic activity is actually ongoing, and it's going forward.
Drillers cut exploration in American oil fields to a 15-year low as some of America's most prolific shale explorers vowed to show restraint amid a stabilization in oil prices. Baker Hughes data says the number of active oil rigs in the United States fell by 4 this week to 176. That is the lowest since 2005. Among some of the energy names, ExxonMobil down 0.5%, BP down 1.2%, EOG Resources down 4.1%, Pioneer Natural Resources up 1.9%. Recapping equities mixed with the S&P up 2 points, up 0.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, much appreciated, Charlie. Thank you so much. Want to get back to Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, joining us as he does every week on the phone in New York City. Ian, how do we take a statistic, which I know has been all over the news media, and I hate to be inflammatory, but when you hear a statistic that there's a virus, 1 death every 80 seconds in the United States, it feels really scary. It feels to me like we're not in control. How do you read it?
Well, you have to consider the case fatality rate, which is certainly higher than influenza. And speaking of influenza, there will be flu shots coming around September, October usually. I encourage everyone to take that. I know there's a big debate. It is not 100% or anywhere near that in terms of efficacy. But the last thing that people would want is both a new COVID infection and a new influenza infection that would certainly raise patients' risk of complications or death. So there's no question, we're in a war, and the virus at this point is beating us up pretty badly. We're up to about 150,000 deaths, and probably when this is all over, it's somewhere, many estimates are around 300,000, which I think is probably pretty accurate. Could even be higher than that. We do have new treatments, which should be encouraging. Monoclonal antibodies are coming along quickly. Not only the convalescent plasma, but more specific antibodies that are grown in labs, and several companies are working on that. So I think we have some new weapons against the virus while we're waiting for the vaccine. But nothing really will prevent common sense, which is careful social distancing, wearing a mask, trying to be prudent about all this while we're, having the weapons ramp up. Fortunately, in the hospital, we're seeing fewer cases, and we're back to regular patient care. And we do, unfortunately, see patients that should have come in earlier with infections and cancers and other things that they delayed treatment on, and now they're being addressed.
Yeah. And so, Ian, what's the thing that has surprised you the most? I mean, one of the things that one of the reasons we love talking to you is you really have seen this from the beginning on the front lines here in New York City. What's the thing that might surprise people from a doctor's perspective, either about this disease or the treatment or something that you've gleaned?
Well, we still don't really have a great understanding. We've only been familiar with this since, let's say, January. So we're talking 6-7 months, which can be a lifetime, but is relatively short in terms of, technology and really understanding. We've seen protein manifestations. Many patients, just mild. They'll lose their sense of smell, have a little cough or cold for a few days, mild fever. And then, unfortunately, we see people who just deteriorate and crash and die. And we don't really fully understand that. I think that's the most surprising thing, is that it's a little unpredictable, which is why we try and encourage everyone to be careful, because we really don't know which patient, what their history, what their immunology is, and how they respond to infection. So we try and caution everyone until we have better treatments along the way. I think that's been the most surprising. I'm encouraged by the rapidity of the response to vaccines. We're going to have many vaccines really in the next few months, and it may turn out that we need a couple of different shots. One may only give you partial immunity, and then you might need a booster. But I'm encouraged by that. I wish we had more medication to prevent infection, something to block the virus. Yeah. We do have the antibodies, which are coming. That's obviously not going to be a pill. That would be more of an intravenous or shot. So I think we're making progress, and we have to stay safe until we really get the cavalry coming in, which really will be vaccines in the next few months. So I think people need to be very careful through the early winter, through the fall and winter, to stay safe until we can really begin to get widespread vaccinations.
I just put a note to myself when I go into my doctor, like, make sure they've got the flu vaccine ready for me.
Right.
Because,
not
do.
Not yet, but soon.
But soon, right? But I just think about, we do it at work, you know what I mean? Yeah. And a lot of us are not going to be at work.
Guess where we're not going
Yeah, we're not going there.
Yeah.
Ian, have a great weekend, a safe weekend, and thank you always so much. You're so gracious with your time. Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, on the phone in New York City. I feel like I've got a direct line to just a great doctor right here.
Totally,
in New York.
exactly. It's like, I got a guy. I got a
got
guy who can answer some questions.
He's our
about
guy.
This. Yeah, he's our
I
guy.
hope he knows that.
Friday, Friends of the Show continues. Friends of the Show Friday continues.
Yes.
Coming up at the top of the next hour, Paul Rabel. He certainly fits that perspective. Can't wait to get his thoughts on what's been going on in sports. In the meantime, Denise Pellegrini, she's got world and national headlines. Hey, Denise.
Hey, maybe your guest can come around and give us all flu shots. Such a nice guy there. Well, we should add Princeton University now to the list of schools that's going online only for the fall. It's abandoning plans to bring back undergrads. They were going to do that in shifts until they decided that wasn't going to work. New York City may become the only major public school system to have in-person learning this fall. Governor Cuomo says that's because of the state's very low COVID-19 positivity rates.
You look at our infection rate, we are probably in the best situation in the country right now, as incredible as that is. So if anybody can open schools, we can open schools. And that's true for every region in the state, period.
Yeah, well, one region, though, isn't too thrilled with this. Listen to this. New York City Department of Education Chancellor Richard Carranza says things will probably start in person, but they might not stay that way.
What the mayor has said, and I have also said, is that we are going to be looking like hawks at the numbers. And if the numbers of the positivity rate starts inching upwards, and if it gets to 3%, we will remote learn for the entire system.
And parents in New York City have until later today to decide whether to opt out and begin the year with all remote learning. Manhattan's Columbus Day Parade is being canceled because of COVID-19. Some think it's just as well. Christopher Columbus isn't exactly a favorite of many Black Lives Matter protesters these days. Global News, 24 hours a day on air. I'm Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. You were listening to Bloomberg Businessweek. Postscript to the story we talked about earlier about the Darien Library. I just heard from a buddy of mine who lives there. He's out of town this weekend, but his immediate response was, I love the wine fridge situation.
Did he really?
And he said he's up in Maine this week, so my buddy from Wells Fargo used my Wi-Fi, one of the few in town that seems to have service. Yeah, so basically he was like, take my house, bro.
But it's kind of funny, right? People are,
Totally.
especially in this environment. Listen, first of all, part of me loves it because it's like one of the things we've talked about with the virus that everybody has, all our medical experts have stressed is that you really do have to think about your community and taking care of your community. It's not, wearing a mask is not about protecting yourself. It's about protecting others.
Right.
I mean, although we're increasingly finding it's great if everybody has one on, just check the CDC website on that. It's not just me, it's the website.
Right. It's science.
It's science.
Yeah, I mean, I was happy to, in part because I had power and didn't need it anymore.
So
like,
wait, are they in,
roll my generator.
where's the person in your house? What room are they in?
They're like several rooms away in Jen's office, my wife's house, because she's upstate.
That's right.
Yeah, exactly.
That's pretty funny.
Anyway.
It's like Jason Kelly's WeWork.
Yeah, exactly. Little WeWork. I loaned my generator out. I loaned an extension cord. Like, this is what you got to do.
But
in times like
take
this.
care of one another.
Exactly.
you wanna talk
Meanwhile, up north, a great scoop by Scott DeVoe. We love what's
so
going
good.
on with him. Canaccord Genuity Group. It's Canada's largest non-bank brokerage. Big brokerage up there.
Yep.
We know it. They are looking at strategic options, as they say, including a sale of all or part of its business based in Toronto.
It's not you, it's me. That's what that means.
Yeah, exactly. I'm just like looking around. I'm just looking around, seeing if people are interested in me as a brokerage. Great scoop. The stock definitely moved on that. No final decision has been made, but if you want to know what's going on in the deal landscape, especially when it comes to activism and Canada especially, he's got two specialties, activism and Canada. Scott DeVoe, he's your guy.
He is totally your guy. All right, you're listening to Bloomberg Business Week. Check out, we're going to check more jobs.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Fifth gain for the U.S. stock market in the last 6 weeks. This week, the S&P advanced by 2.5%. Today, S&P managed to eke out a gain of 2 points right at the close, up by about 0.1%. The Dow reversed earlier losses, up 46 points, up 0.2%. NASDAQ, though, a down day for the NASDAQ Composite Index, down 97 points, a drop of 0.9%. Tech shares fell as the White House ramped up its confrontation with China, while a better-than-forecast jobs report helped fuel advances for smaller American companies. S&P, as I mentioned, up 2 points, up 0.1%, 10-year. The yield there, 0.56%. Gold down 1.5%, $20.32 the ounce, and West Texas Intermediate crude up down 1%, falling 40 cents a barrel, 41.55. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Well, it is Jobs Day. We got the big jobs report, and employment, it's at the core of this recovery, Carol, to say the least. Irina Novoselsky is back with us, the CEO of Career Builder. She joins us on the phone from New York. So, Irina, when you look at, let's just start with the data and then expand from there. When you look at a number like this, you see what the administration has to say, you see what various analysts and economists have to say. How does it jive with what you're seeing in your business?
Yeah, so we're seeing some positive momentum. When you look at the results, they are the lowest jobless claim numbers that we have since the start of this pandemic.
Okay, ladies and gentlemen, time's up for today. Let's sum up how much we earned this week. On Monday, we made 200 pounds. On Tuesday, there was 2,000 pounds on Japanese yen. This week, quite good was with Japanese yen, right? On Wednesday, we did 900 pounds. Yesterday, there was 200 pounds in profit. And today, we made 200 pounds in profit. Well, everybody who followed us, who got the strategy, well done. It was a profitable and good week. As always, for the rest of you, if you would like to purchase strategy, you can find our strategy on our website, or you can see the ticker, blue one at the bottom. You can see the address where you can get the trading strategy and practice for a week or two, and you can make the same profit as we do. All right. I wish you all the best this weekend. It will be very hot in England, so hope you will be safe, stay safe, cool, and I'll speak to you all as always on Monday next week from 8 o'clock UK time. Stay safe and have a great weekend. Bye-bye.
You know, I'm about to take a vacation happily, but getting on a plane for the first time, but I don't expect to see a whole lot of people, and we know that travel and leisure, you know, hospitality overall, so much of that, I mean, that industry, those industries have just been crushed in many ways. Media, we work in it. We know, you know, our colleagues at other organizations are suffering here. Help us understand how that fits in with some of the patterns you're seeing industry by industry.
The ones that you mentioned, we're seeing across the board as well. The COVID hard-hit industries are continuing to still slowly really feel the impacts of COVID. However, a lot of those employees that were impacted by some of those layoffs, one of the things that we are seeing is they have a lot of transferable skills. They might have not done the job of what their skills can allow them to do, but by pivoting and really looking for work based on their skill set, they're actually a great match. For example, flight attendants, hospitality workers, they're over a 95% match for customer service representative roles. And that customer service space right now is growing and looking for talent as the e-commerce community as so much moves into online, and those parts of our domestic growth are flourishing. But we did see a little